this video, I'm going to talk about whether we are now going to start seeing a property market crash, crumble, tumble, trough, whatever you call it, or whether we will continue to see it go from strength to strength. Whether you believe it or not, I'm going to talk about the data, okay? You don't have to believe me, I'm inconsequential. I'll talk about some data, and it's actually gonna be a treat. We're gonna be talking about something called the dwelling sales to new listing ratio, and sounds a bit nerdy, but like we're gonna be going around the Australian market and tell you city by city what's going on. Okay, so my name's PK, and I help people build passive income without using a buyer's agent, using data. All right, and look, if you want to hold your subscribe and if you want to hold your thumbs up, feel free to do so. Like, this video is definitely going to mean that you give me one, but you know, you can do it right now as well if you want. Give it a thumbs up, give it a subscribe, and I want you to tell me in the comments as I go along whether you think this property market will continue to go up, whether you think there is another 10-20% left in it. Tell me the percentage, leave it below, or just leave a comment, yes, it will continue, or actually, PK, the data's all garbage, it's going to start tumbling. Let me know. But let's go into it. I'll start the screen share right now. So what you see here is dwelling sales to new listings ratio. You can find this online. This is from CoreLogic data. I also use very similar data, deeper, that I play around with. But this is a good interactive tool. What we're going to go through is national ACT, city by city. What we're going to do is we're going to see what and how this data was performing. Essentially, what this means is that in a given time period, a month, 2 months, a quarter, so month on month, quarter on quarter, year on year, etc. How many sales have there been of properties versus the properties that have been listed for sale? Okay, so just to clarify, if in a month there is 10 properties listed for sale and 10 properties have been sold, then we call that an equilibrium market, and the ratio would be 1, okay? If there has been 20 properties listed for sale but only 10 sold, then we would say that supply has outstripped demand, okay? And the ratio would be down here, like 0.5, which you can see is not. Or if there have been 10 listed and 20 sold, not that that's entirely possible, but there might have been excess or surplus properties from bygone months. Let's say there was in a month or a quarter 10 properties sold and 20 sold, then the ratio would be up at 2. So what you're looking for as I go through this video is to see whether the ratio is above 1, which means a strong and strengthening market, or whether it's below 1, which means that it's a weak or weakening market. When it's above 1, that means that overall demand is outstripping supply. Just write down grassroots level, no other data needed. And when it's below 1, supply is outstripping demand. When supply outstrips demand, prices drop. When demand outstrips supply, prices rise. So cleanly speaking, every time it's above 1, prices rise. So what you can see here is nationally, from about 2016, apart from this little blip in July 2017, there had been an excess of supply over demand. You can see the ratio was well under 1, which means that of all the properties coming online for sale, they were not all being sold, okay? So supply was more than demand. And you could see really in 2018, it really had a trough there, right? 70% of all listings were actually getting sold. And then what you started to see this is national, by the way, and I'm going to go through in this video city by city, so hang around. There's going to be some pretty interesting insights. And what you saw then in 2018 and especially into 19 was this ratio start to get better. And when everyone was, jittering, everyone was fearful, everyone was keeping their money under their mattress last year through COVID, you actually saw that in middle of last year, or actually exactly when COVID started, I think it started March or April, something like that. April is when this demand outstripped supply, and it had been very consistently outstripping supply right throughout the end of last year into the start of this year, and phenomenally, what we see now, this data is up to date as of July, so last month, it's actually rising even more. So what you have on our hands is a housing crisis. What you have on our hands is what we call a vast excess of demand over supply. And when people talk about crashes and all this kind of thing, look, of course, based on this, I can't predict what exactly is going to happen, but you can see this trend. These trends take time. It took 2-3 years to go from 0.7 down here up to 1.4. Now, for it to come down, if it starts coming down right away, it will take 2 or 3 or 4 years to come down. That's why I keep harping on about how we're 1 year into this property boom. There's probably another 2 or 3 years left. The typical boom in Australia, if you look at the last 60 years of history, goes for about 2 to 4 years. So, this in itself is saying that with all the free stimulus, the government spending, home builder, all the stamp duty concessions, all that stuff, people are buying properties more than ever before. Savings rate, that's the second reason. Savings rate is through the roof. With the lockdowns, we can't spend our money on expensive things like holidays and things like that. And also, monetary policy is loose. Actually, it's not going to go up anytime soon. Just 2 or 3 months ago, before all these lockdowns, everyone was saying interest rates rising, all this kind of garbage. They're not rising. The Reserve Bank is intelligent. They've always said not before 2024. In fact, they're buying more bonds now again, okay? So monetary policy is loose. It will remain loose, if not get even looser. And I'm really trying to illustrate the data here, guys. Of course, there's many more data factors where you can validate what I'm saying, but a lot of folks here on YouTube, on the right, on the left, people who look a little bit like me, they present you with news.com.au articles. Now, that is utter garbage. No one should trust anything that news.com.au is suggesting. Here is the data, and let's play around with it. So if I now select ACT, which has been one of the most phenomenally high-performing markets in Australia, in fact, one of the best markets in the last 4 or 5 years, you can see that around 2019, even before COVID, it was incredibly strong. Cyclically, it went down a little bit here, but this is higher. This ratio of 1.6, demand is just completely destroying supply in Canberra, especially, and prices have gone. Like a place like Dunlop, which is kind of not your red light district, but you wouldn't necessarily take your wife, your girlfriend, for a walk around Dunlop past 8 p.m. at night in northwest Canberra. These places have gone from like $400,000 to up to $700,000 literally in 2 or 3 years, right? It was positive cash flow back then. Now, trust me, we were buying there. We see this on the ground. This data actually has an impact. So you can see just how strong the ACT is. So, that's a really good example. Everyone wants to know what's going on with Brisbane. So let me skip Adelaide, and I'll come back to it in a second. But see this. Like Brisbane property market, when everyone, all the buyers agents were saying all the way from 2004 that, Sydney's boom, Melbourne's boom, this is the next one to boom. When you actually took a step back, just thought twice before paying their $15,000 fee, you would have seen this data was pretty average for Brisbane, right? And you would not have invested there. Prices were pretty much flat in Brisbane up until last year, but see what's happened now, okay? So this is exactly when we started investing. Especially around the $500,000 price bracket, middle ring Brisbane suburbs. I've talked about them before as well. You can see just how hot this market is. So if you're trying to buy Brisbane right now, good luck. The time to buy was a year or 2 ago, but certainly not 5 years ago. You would have had 2 or 4 years of plateauing your money, not doing anything for you if you listen to those property investment companies. So here I've done a video literally a week ago on how Brisbane is a 2-speed economy. You'd need to be very careful, even despite this data, where to buy. But you can see this trend does not suggest at all that Brisbane's going to crash. Okay, and of course there's markets within markets. So let's come back to Adelaide, where all my clients, all you guys are going to be watching this. We were loving Adelaide, last year. We were buying, I literally think we bought 80 properties there in Adelaide. And just like you can see what's going on here, right? So Adelaide was always balanced. It's not like prices were dropping or anything like that. But you can see that it really started to go up at the start of last year. And then, I mean, check it out. Last 6 months, like literally, if you had bought a 300k property in 6 months ago in Adelaide, it's 400k now. Like dead set, I'm not making that up. Go check it out. Places like Trott Park or others, check them out. So once again, this, you might say, look, this is a bubble, PK, but when you have this little supply, I can't emphasize this enough. For every one property that is being listed in Adelaide, 2 are being sold. This is not sustainable. That just means that past excess supply is being soaked up. There's just not any properties for sale in Adelaide, and that means only one thing: prices are just going up and up. You can't really build properties very quickly. It's not that you can just turn on thousands of properties. It doesn't work like that. It takes years for that to come on. So this boom ain't going away in Adelaide anytime soon. Let's look at Darwin. People sometimes boo-boo Darwin a little bit. We've not invested there. I'll be very open and honest with everyone watching this video. We've not invested in Darwin. I always think it's too high risk in most places to invest in Darwin. You can see why. It's very sort of topsy-turvy. It has gone up a lot, as you might know, but it can equally come right back down. There's a lot of building approvals and things like that in Darwin. Hobart, we haven't invested there for the last couple of years, but starting 2015, we did a bunch of buying there. So you can see that it was a bit helter-skelter, but consistently it was above that 1% threshold. So it was up and down a little bit, but you can see all the way from 2016, up. All this time period, prices were rising like nobody's business. Even around Launceston, Burnie, other places like that, Devonport. This is really an icing on the cake now for Hobart. So if you bought there, maybe not last year, but previously, good on you. You did the right thing. Now, Melbourne, I've been a little bit skeptical of in other videos, and I've explained why. I'll probably add one of those cards at the end of this video so you can check that video out. But let's see what the data is saying now for Melbourne. So you can see here, right? Like a lot of people lost a lot of money because they bought at the bottom, at the top of the boom in 2017, and then it went right back down. Down here, it has started coming a little bit higher, but even this high is really only a little bit above 1%, which is a balanced market with respect to supply demand. Now it is coming up, but I've explained before for many reasons. Melbourne's a little bit on a higher risk side. Prices are definitely increasing, and you can see that there's no way that will plummet anytime soon. Like even if we look at this top to bottom, it was a period of 1.5 years. So even if this dwelling sales to new listing ratio starts plummeting, like let's say from August, it will still take a decent 2 years to come down, in which time prices will continue to rise. Okay, let's have a look at Perth. A lot of you, I'll probably do a separate video on Perth, like a deep dive. Tell me, guys, if you want a video on Perth. I don't think I've covered it so far. Leave a comment below just saying Perth, and I'll see how much interest there is. Everyone's a little bit skeptical of Perth. We've been buying there, huge clients that are watching. There's hundreds of you. I know that, we've been talking about it in our mentorship calls, but check it out. Like, how can you resist this kind of trend? Now, you can see it's off a very low base, so that doesn't mean that Perth is going to boom. I've never said that Perth will boom. You need to be very careful about where you're buying in Perth, much like in Brisbane. But you can see this trend. It's inescapable. It's unavoidable. It has a lot of momentum. A lot of the excess stock that was produced by everyone going haywire and crazy in the last mining boom is now being sucked up. You can see that here being sucked up. And now we're more at a balanced market where we're seeing that for every stock, piece of stock, or when I say stock, I mean house coming on the market, it's, one's being sold. So we're quite balanced. If this continues and you see Perth becoming more like Brisbane, which we went over before. And then lastly, let's check out Sydney. Our friends in Sydney who, have all become millionaires over the last year. You can see, once again, post 2016-17, prices did go down. Really, the time to be buying in Sydney was here. Now everything's, shot up, and there's a big sort of, apart from townhouses and apartments, freestanding houses, a real supply shortage in Sydney. So I don't see prices coming down at all, really anywhere in Australia. In fact, 96% of suburbs have gone up. Yes, there are still suburbs worth investing under 300 or 400k that haven't gone up by more than 15 or 20%. Yes, you can still buy at the bottom of the market, but the majority of Australia, you can't do that. So the point of this video is not really to tell you where to buy, but rather the point of this video, if I overlay now all these cities, is check out this trend, like, this overall national momentum, maybe from a bottom or a low of 2018, August 2018, steadily going up. You can't, property markets are dinosaurs, or they're like ships. They're like the Titanic. You can't turn the tide or the direction or the orientation of a ship like a Titanic overnight. That's why they crashed. That's why they all, that's why the movie was made. It takes time, like a ship, for property market direction, supply-demand dynamics to shift. So no doubt at some point, supply will start exceeding demand, but that is not going to happen. It just ain't going to happen, in the next year, probably not even in the next 2 years, because this momentum is building up, and it's like the Titanic going faster and faster. You can't put the brakes on it. You can't stop in a 50-minute interval. It can't stop within 10 minutes. It takes time for the ship like this to turn. So this tide is great. I've been watching a lot of Will Smith. I don't know why recently, but you're crazy if you're not investing in this property market. I don't know why you wouldn't do that. Everything points to more and more money to be made. But let me not spruik too much. Guys, if you're kind of on the sidelines, my message here today is get off those sidelines. Buy. I don't care if you do my course or not. Just buy, don't use a buyer's agent. That is something I care about. Try do it yourself. There's so much education on my channel. Other people have their channels. There's literally like almost 200 videos on my channel now. Educate yourself for free. If you can't do it, Property Investment Accelerator, I'll leave the link below. Guys, don't book a call with me if you're not 100% ready to commit. I have so many people wanting to work. So, I'm more than happy to work with you. I'd be very grateful to help you. Book a call if you're absolutely ready. And guys, join my Facebook group. Plenty more insights there. My name's PK, and okay, if this didn't deserve a subscribe, like, I don't know what will. So hit the subscribe button, give it a thumbs up. Guys, share it with someone who actually value it. My name's PK. Catch ya. Bye.